Hello guys, welcome to My Finance Teacher. Before we look at this chart of crude oil, which I think is pretty interesting, let me remind you to hit the like under the video if you think it's kind of interesting or maybe even a little bit useful. And if you are not subscribed to the channel, make sure you do subscribe. And now let's actually jump into the chart. What we see here is a weekly chart of crude oil. And what I'm trying to identify on this chart are these intermediate cycles in crude oil, which generally I think last for about half a year, although they can the duration can range from, as you see, 24 weeks even up to 46 weeks. That is based on what crude has been doing over the last kind of 3 years after this significant drop in 2014. So knowing this usual duration for the intermediate cycles in crude oil helps us to identify what is more likely to happen to crude oil over the next short term to medium term. And one thing that I'm not really sure about yet is whether crude oil has already finished its intermediate cycle sometime in the middle of August, or we are still within that same intermediate cycle. If the cycle has already finished in the middle of August, it would have lasted 27 weeks. However, if we are still in the same intermediate cycle, then it means that this cycle has already been going on for 37 weeks and it might continue for another few weeks. Actually, both of these possibilities are within the normal sort of duration range for these intermediate cycles in crude oil, so we're going to look at both of the possibilities. At the moment, to be honest, I'm not really sure which one is more likely, and maybe you guys can share some of your opinion with me, and of course you can do that in the comments below. However, in either of the cases, whether this intermediate cycle has already finished in mid-August or hasn't, I think in the short to medium term the outlook for crude oil is not really that great. The first thing I want to point out is this negative divergence between the price and RSI. On the price we see a higher high in the beginning of October as opposed to the recent high in the beginning of July. However, RSI does not confirm that higher high, and that is what we call a negative divergence. This actually might be a little bit stale already, because negative divergences, they indicate a possible decline sometime soon in the future, and the decline, as you have seen on the chart, has already taken place. Nevertheless, I wanted to mention this negative divergence since we haven't had a chance to talk about crude oil for quite a while. Another thing I want to point out is that over the last year or year and a half, crude actually come up quite nicely, all the way from around $42 all the way up to about $66 at the beginning of this year, where RSI was deeply into overbought territory, and subsequently even higher, all the way close to $76. After deeply overbought RSI, at the moment RSI is into the neutral territory, but after such overbought levels, I think crude oil might require some more time to cool off, and this oscillator RSI might need to come closer to the oversold levels over the next, several weeks, I would say. So whether we are in a new intermediate cycle since the middle of August, or whether we are still in that same intermediate cycle, in either case, over the next short term, I see crude oil declining, possibly towards around $60 price range, and I'll talk about the reasons why I see that price range on the chart, because the chart shows us a support resistance zone around that area based on several factors. There was a local high in the middle of 2015 that stayed unbroken all the way until sort of the end of 2017. Then after breaking that high, of course, crude oil retested sort of similar levels. That's the price range between around $62 to $58. That is why I'm referring to that price range, using its average, which is around $60 or so. So that is formed by the low in early 2018, by the high in mid 2015, and there are a couple of other factors as well. For example, this 100-week moving average is also just at about $58 or so. So that's why I think crude can potentially decline all the way down to $62, $60, or even $58. Now let's look at these intermediate cycles. If we are still in the same intermediate cycle that has been going on for 37 weeks already, then we might have a look at the Fibonacci retracement numbers and see how much of this rise from around $58, how much of that rise can we actually retrace. Well, at the moment the crude is just above the 62% retracement. There is a wick that is pretty close to 62% retracement. However, I think we are likely to continue moving down, possibly extending this intermediate cycle into, well, say mid-November, past that early November ban on the Iranian oil. So if we are still within that same intermediate cycle, then by mid-November it's possible price might actually retrace, well, let's say about 78% of the previous rally, and be somewhere at about $62 per barrel or so. That would give us a low compared to what we saw in the middle of August, and that would actually be the intermediate cycle low for crude oil. That is one of the possibilities. This possibility aligns well with the seasonality in crude oil. Usually fall or autumn is quite a quiet time for crude oil, since the driving season of summer is over and heating season of winter has not really started yet for the next several weeks. For that reason as well, I expect crude oil to cool down for a while, and after that, sometime in the second half of November, sometime in November, a new intermediate rally might start, bringing oil back to, well, around $75 or so. That is a possibility. Another possibility is if we have already finished the intermediate cycle in mid-August, and crude oil is actually in another intermediate cycle already, in the new intermediate cycle since mid-August. In that case, the short-term picture is a little bit worse for crude oil, because currently the price of oil is very close to the previous low of mid-August, and if those lows are broken, this becomes a failed intermediate cycle, which means the new cycle low is going to be lower compared to the previous low. And given the normal duration for intermediate cycles of around half a year or so, we would unfortunately have a lot of time for prolonged decline in crude oil price within that intermediate cycle. On the chart, I guess it might look something like that. So a continued decline, and of course sometimes there would be bounces due to this winter seasonality, the heating time for higher demand for crude oil. But if we are in this new intermediate cycle already, which looks like it might actually fail, then there is just more likelihood for crude oil to come closer to the bottom range of this support zone, to the $58 price range rather than $62 price range over the next, well, probably several months. These are the two most likely scenarios that I see on more likely two possibilities. But another possibility that I think probably less likely is that this decline that we've seen over the last 3 weeks is just some sort of mid-section decline in an intermediate cycle, which will actually prove to go back to higher levels at about $75 or so after finally reaching a declining phase of that cycle closer to the end of winter. That would coincide better with seasonality in crude oil, and we've seen these sort of cycles in the past where for example, this cycle that lasted between August 2016 and June 2017, we saw sort of significant declines lasting for also 3 weeks actually, early in the intermediate cycle. But what we also saw is that after these declines, price recovered very quickly, sort of again giving us this normal shape for a smoothed out price action. In either case, I think in the longer term, crude oil might actually form this sort of descending triangle formation, and the upper part of that descending triangle is going to be this long-term downtrend line, whereas the lower part of that descending triangle might be that support zone between $58 and $62 with an average of around $60 or so. So crude oil might actually bounce up and down within this descending triangle before breaking out of that triangle, possibly on the upside, but time will tell, and there is a lot of time for us to come back to this chart and see what are the possibilities sometime in the future. In the meantime, to take advantage of this decline in crude oil over the next, well, probably a few weeks, I'm actually looking at a couple of interesting companies, Shell, which I already hold some at the moment, and BP, of which I don't have any shares at the moment. And the interesting thing about them is they both pay pretty good dividends. The annual dividend yield is about 6% for both of these companies. And specifically, if you look at Shell over here, look at this February low that was at about just under $62 per share. At the moment we are at about $64 per share. So even though crude oil is well, relatively higher compared to where it was in February, it was at about $58 in February, and it is now at about, well, higher than $66 per barrel. Shell actually is relatively close to the lows it had in February, so it looks like there is some underperformance in this company, and that might mean that it's sort of on discount at the moment. Of course, this is just my opinion. You gotta do your own due diligence and make your own financial decisions. But even just the dividend of 6% annual dividend does sound pretty interesting. Let me know what do you guys think. What do you guys see on the crude oil chart? And as always, have a nice day.